US dollar has weakened a bit today as investors position for possible election turmoil. The Canadian dollar, as a result, is up. But remember, last week it hit the lowest since 2020. We were joined by a currency watcher who says the final polls in the US election are tight, but have been showing surprising strength for Kamala Harris. Of course, that apparently has been weighing on the US dollar because Kamala Harris is seen as less inflationary. Inflation means higher rates, pushes up the US dollar. We were joined by Adam Button, Chief Currency Analyst at Forex Live. Oh, hello, Adam. Thank you very much. You're right here. Sorry. I thought we talked to you earlier. Thank you very much indeed for joining us. So am I right in... Is that's the accurate thing? People are slightly lightening their Trump trades today, and that's helping to push down the US dollar?
Yeah, that's right. It's come back a little bit today on the election. We've had some polls, particularly one out of Iowa, and also just a little bit of angst about the Trump trade getting a little bit too overcrowded. And we've seen a bit of the air come out of the US dollar. Treasury yields come down as well today. And that's helped the Canadian dollar come off the floor. We're going to see a little bit of that back and forth right into the results. Our
dollar suffering. I mean, the perception is that we're going to be cutting interest rates at least as fast, maybe faster than the United States. So will we see ongoing pressure on our currency?
Well, that's it, right? I mean, there's not a lot that's going right for Canadian dollar and for Canada. Why is the Bank of Canada cutting rates? Well, we have, you just had someone on talking about housing, and that's looking uglier all the time. We have population growth going in reverse. And, Canada isn't quite the resource exporter that it once was, or a place to invest. So there really isn't a lot for you to sell if you're Canada into the world. And so we're seeing really persistent weakness in the Canadian dollar, but not to overstate it. Some of that is U.S. dollar strength as well. The U.S. is running enormous deficits, even relative to Canada. And, growth there is pretty impressive. But Canada, there are some real headwinds gathering for Canada. And, these, I think, are still the early days of some of that price that will be paid in the currency.
Well, we could see a weaker Canadian dollar going below 70 cents U.S., for example.
Yeah, I think in the next few days we're going to see a real election trade unfold, and then beyond that, no matter what happens, we're going to see some weakness in Canada. The factors. If you go in the long history of Canada was a major manufacturing export nation in the United States. For the 20th century, along with resource extraction, we'd sort of pivoted away from that around the year 2000 and moved into more housing as a driver, and then population growth as a driver. And if you look into the future, Canada doesn't really have a driver of economic growth at the moment. There's not really a vision of itself as doing anything particularly well. And I think until that changes, it's tough to get constructive on the Canadian dollar. So, 68 cents is where I'm looking at in the next year or so as sort of the chickens come home to roost.
68 cents US. Wow. Yeah. I mean, good for the Canadian exporters. Good for tourism in this country, but hard for people going to the States on vacation, for example.
Yeah, people won't want to hear that in the next this coming winter, but I think it gets worse even the winter after that. And, there aren't really a lot of manufacturers to benefit. You look at some of the industries that might do well, commodity extraction. There aren't a lot of real manufacturing companies in this country anymore. So there's not a lot of upside to a weak currency like there might have been, a few cycles ago.
We could get a change. I mean, the Conservatives are riding high in the polls insofar as you can rely on polls. If Pierre Poilievre became the next prime minister, would that potentially lead to a rally in the Canadian dollar on a perception he'll be more business friendly, for example?
Yeah, I mean, I think a lot of that's priced in. We saw that in the UK when the election was announced. You'd already priced in a Labour government, before it ever happened. I think we're already at that point in Canada. Were it to happen a little more quickly, we might get there. One of the announcements I'm a little bit concerned about right now is Pierre announcing that they're going to remove the tax on new houses. So that's 5% cheaper price if you'll get now if you wait until a conservative government comes. So in the interim, as a home buyer, you say, well, I'm just not buying, right? And so now you have more pressure on Canadian housing in the interim until that policy can be enacted. So now, however long that lag is, it could be tomorrow the government's toppled, but in all likelihood, it's around this time next year. So there isn't a lot that can really change in the short term. Further out, we'll wait for the policies and see what they are. There is some fiscal space. I mean, there is a bit more good news that people aren't really accepting around that. But a lot's going to depend on what the U.S. does, and a lot of that's going to depend on what happens tomorrow.
And just, I've been asking guests a lot, just turning to the US dollar for a bit, is there a risk in the next few years that we start seeing real concerns about the growing US government debt and that starts to weigh on the US currency?
It is. It's one of the underrated stories of the election right now. We talk about the presidents, but there are, and that side of it, but in Congress, there are some real fiscal hawks or some pretend fiscal hawks anyway. And if you get a situation, you have tax cuts that are expiring next year in the U.S. and those need to be actively passed or extended. So you might get some fiscal tightening naturally, in the gridlock scenario. And I think that something has to be done in the U.S. They're running deficits at 7% of GDP. It's around 2 or 3 in Canada. And they're running it at a time when the growth in America is at an impressive clip. So, that is going to be a very difficult problem to solve. There's ways you can grow your way out of it, but it's very difficult given some of the entitlements and some of the aging demographic in the U.S. to find a way ahead. Where you don't get at some point either higher taxes or lower spending, and that spending side is getting increasingly difficult to address because so much of it is defense and interest now.
Adam, some sobering analysis there. Thank you very much indeed.